Central banks in the COMESA region need to maintain low and stable inflation as a necessary foundation for sustainable growth. This was an appeal by the Minister of Finance, Matia Kasaija, in a speech read by the Deputy Secretary of Treasury, Patrick Uchailab, at the COMESA Committee of Governors of Central Banks Symposium in Kampala.
Without price stability, all our other efforts as governments to lift our people out of poverty will be in vain. However, prioritizing inflation control does not imply disregarding growth and socio-economic transformation. No, it doesn't mean that. Second, central banks should continue adapting flexibility in policy instruments in the advent of global shocks.
In an unpredictable world where shocks are becoming more rampant, it is the central bank's role to complement efforts to cushion against the adverse impact to further the development aspirations of the people.
We need to undertake reforms while understanding the market conditions. So how do we work together with the markets to implement reforms that are going to unlock the structural rigidities in our economies? Because conducting monetary policy in the context of structural rigidities requires reforms. But what kind of reforms do we need to put in place?
The question is no longer whether shocks will occur, but how prepared our financial systems are to absorb them without compromising stability, trust, or long-term growth. Strong capital positions, sound liquidity and financial buffers, effective risk management systems, and forward-looking regulatory frameworks are fundamental.
The COMESA Governors Committee, chaired by Michael Atingi Ego, the Bank of Uganda Governor, committed to continue strengthening coordination between the fiscal and monetary policies within and across borders. Shared information, coordinated policy responses, and transparent policy communication can help prevent contagion, says Dr. Adam Mugume from Bank of Uganda.
The climate risk now is permanent. Okay? So these are the things we have to live with. The question is, are we prepared for that kind of thing? Do we have, number one, fiscal buffers? In most of COMESA countries, the buffers are zero. That's why we brought this discussion here, that really you need to build up your buffers. Forex reserves, fiscal buffers, those are the things we're talking about. Otherwise, these things are still with us forever, and you have to plan for those risks.
It was noted that the next global shock may not arise from traditional financial sources, but from disruptions of global supply chains, cyber threats, or extreme weather events.